What's up, everybody? Thanks for joining me on these analysis. We're going to be looking at MicroStrategy today. We're going to be going over some call options to see what potential earnings could be made. This is not financial advice. I'm not telling you to buy call options because this is very risky. You can lose all of the money that you put into this, so be very, very careful. I'm just going over call options just to show people what the possibilities are outside of just purchasing outright shares. So we're typing in our symbol. We're on option calculator, optionsprofitcalculator.com. Type in your symbol. You'll see your current price pop up for anybody who hasn't used this. Then you can see the options chain, and they give you a bunch of dates here that you can pick from. So pretty much the way you want to do it, especially like this is not financial advice, of course, but if you were to do it, you want to do something dated that the Bitcoin cycle can run through its full course. So you want to do something like December 19th or something like that, maybe January 2026. Because remember, the Bitcoin cycles usually run through Q3, Q4. You normally get your top in Q4. So this allows you enough time before your options expire. So then you have your options chain, your strike prices, you have your puts and your calls here on the side. We're trying to do calls. Calls are essentially saying that you believe price is going to go up, and then you'll have expiring prices along the way. So I'll do an example, but you have your strike price and your ask price here. So these are anything from this point up or in the money. That's why they're more expensive, because you're more likely to profit. And then out of the money are these here. That's why they're cheaper, because the odds of you profiting are less, but you gain more because you're talking about your break-even price being 1080. So you're talking about MicroStrategy going to 1,000. But if it does go past that within a certain time frame, you'll make a ton of money. But you want to be careful because you want a strike price that is like it's going to give you a good multiple, but you don't want it to be too high, because then maybe you never actually break even, or it erodes because of the curve that you have. I'll just show you guys so you can see. We'll just do like 500 bucks. So currently the price per option is about 38.9. So let's say you were able to buy, about $10,000 worth. So you buy 3 contracts, expiring December 19th. 500 is your break even. So we'll do a little bit past 500. We'll say that MicroStrategy is going up to $1,000. Doesn't mean it's guaranteed, of course. It's just for example reasons. You can see the gain on MicroStrategy here on the side. You can see the price of MicroStrategy, and then you can see the curve. So if you fall within this region here, this is how much you'll lose. So essentially, you can lose 100% of your money if MicroStrategy is $480 you can lose 100% of your money if MicroStrategy is $480 by December 19th. But just on December 11th, you'll lose 50% of your money, and so on. You can see how the earlier it happens, the more money you make, and the more you go up, the more you make. So this is 3 contracts. This is $11,000, and that's running up to about $1,000. So if MicroStrategy takes off in May and it hits about $800, you'd be sitting on about $100K off your $11,000 investment, which would translate to 180% gain on MicroStrategy shares. So just something to look at, something to think of. Be very careful though. You can lose a lot of money, as you can see. I know you see a lot of green here, but it does not have to play out like this. You can see the probability of profit is only 19%. So you do need to be careful, but you could make a ton of money. Do another example for somebody who may have a little bit more money. We'll do, see if you can buy 15, where you have 58,000 in the same example, roughly 60,000. And then you can see what your profits would be like if MicroStrategy ended up hitting these numbers. But remember, everything that you put in can be lost. If you start getting here to this, let's say MicroStrategy is still sub 400 all the way up into September, you can start to lose your money, or you could really be in the red severely. And then if you start getting closer to the expiry date, then you can lose everything. But then on the flip side, once you get past your strike price, which was 500, you can see, even though you underperformed the underlying asset, which was 89%, if you make it all the way to expiry and you're at 552, then you'll make 33% of your money. But then if you're just at 528, you lose 28% of your money, even though it went up 81%. So keep that in mind. But the further you get away, the larger the amount is. So if you expire, if the options expire and you're sitting at 816, this is what you'd walk out with. But if you hit 816 earlier on, you can see the number goes up exponentially. And then we'll do another example of a closer expiry date for anybody who wants to risk a little bit more. If you did April 4th, current price is 291, and you truly believe MicroStrategy is going to go up, then you're willing to gamble and risk whatever you have. Not financial advice. Do not do that. Well, let's say you did a strike price of 302.5. We'll put it up to 400. And we'll go back to the first example of about 11,000. This is what your chart's going to look like. So as you can see, if you get above 316, you really start to move up exponentially up to $400. And your probability of profit is 26%. And if you were to put the same amount that we had last time, which was about $50,000 roughly, this is what your numbers could look like. You could lose practically everything if you fall short. You can see the red zone here. But if you were to get lucky and call the price in the proper direction, this is what your numbers could look like, all the way up to expiry date. And then if it happens sooner, you make more money. But obviously that's far-fetched for Monday, or March 29th. That's actually, and that's the other thing too, with options, they will count these weekends too. So you're losing money over the weekend, which is kind of crazy to me, but that's just how they work. Because yeah, you see the 29th and the 30th, that's Saturday, Sunday. So really you would start here on the 31st. But yeah, it's something to consider. Be careful, be safe with this. Definitely understand this before you even get into these, because you can lose everything. But it can be a great tool to make a ton of money. But yeah, that's all I have for you guys. I'll see you in the next one.